Hello and welcome. It is the 14th of January 2018. My name is Derek. All bets trades of the like within each his own risk and their own reward. Let's take a look at silver, gold against both Canadian and American fiat debt note currencies. Let's take a look at gold against the crypto, Bitcoin as well in this video. A little bit, but of course, similar story within the US and the Canadian cross for both silver and gold. In the case of silver and the Canadian fiat debt note, it had this level of resistance at about 19 and a third, and it had a bottom of 1830. So it's been holding that 20-ish level that's been quite large for quite some time. Monthly term time frame. It's the level in here that it came up to, and you can't see this beforehand, but what happened before this, before the 2008 highs, and when I say 2008 highs, the July of 2008 highs, this was up to about here, $21, $22 and change in February, March of that area. And I was getting into silver in 2000, or first hearing about silver in 2007 as a investment class in the metal in itself. And then of course it had its fall and its rise. And well, this 20 level, of course, support in here, congestion area, and once again, we can see it's been support so far amongst this area. This was also the level of resistance, and where I was going to my coin shop back in here on really what seemed to be multiple times per month. And then it got to the point of ordering it with people who are on YouTube and different people that I met. Then findings like silvergoldbull.ca, and pretty much that's where it's been. Of course, now I cross it against Bitcoin. I'm not going to show silver against Bitcoin in this. I haven't bought any silver since a long time ago. Probably back in here when it was really low. Not against the dollar, against that of Bitcoin. Oh, okay. So anyway, as far as this long-term chart is concerned, just really hanging in there, going sideways. If we take a look at this against the US debt note, and within it, it's a big area here at around the 18 or so level, which was resistance in here, resistance here, support here. It's been a little bit below that. Of course, the big beneficiary to that is how the US currency has performed against pretty much practically every other fiat debt note that other countries and nations pursue. And the monthly chart, it's just again in the sideways range. It's really got to get above like 20 and change. So to think any of this daily move is up a lot, not even maybe. It's got a long ways to go for that to be the case. As far as this in here, the Canadian chart had a nice little price correction to the 18. This one more through time, as it's had its nice little run higher. Therefore, it's gotten some of the energy. If this thing ends up leaving upwards to the 18 on the 18 average, that is definitely giving a good indication sign that we could be having another decent leg higher. And this last one was pretty good. For we have this double bottom in here, two U's, two V's. Oftentimes what people would do is they would take the distance from point A to point B linearly, Linearly, not literally, but linearly. High 13s versus high 14s, so that's a dollar, so high 15s is what you would expect, and well, that's exactly where it went to. So now breaking resistance, you'd be talking about making another leg higher. Previous area of support we can see, just quickly seeing this in the congestion area is 16 and mid change, as I'd be considering the next level. And then within the weekly chart, just making a move, establishing level of resistance on the weekly. And what's interesting about silver is it's a heavy metal, literally. As I just look at how much or how big of an ounce is, and it's $15.62 US cents right now. I've let people touch 1 kilo bars and coins, and I usually oftentimes get the same 2 words. That's heavy. Because when you pick one up, I mean literally 10 ounces, which is $156. It weighs a lot. It's got a unique sound to it. I'm going to take a 10-ounce silver bar and just tap it a little bit. Maybe, I don't know what the sound will be like. Hopefully it'll be fine. Anyway, that was just something to do because I have a 10-ounce silver bar just by me at this time. And yes, that's silver on the weekly. Let's transition into gold next. Let's start it off against the US fiat currency. And amongst its weekly term, it's in a nice little run. And what's making it different from the last runs in 2017 is, well, it hasn't, every single one of these runs were just back and forth, really choppy. This is the highest, okay, it's basically the highest it's been above the 18 average of highs without really any type of price corrections thus far. And it looks like we might be in line for another decent leg higher without really any decline in the near term, as we see pretty much the same thing with silver, how decent green, and in here it's an ascending triangle. We can see an uptrend line over the last 3 periods and resistance at around the same level. If we scroll it out to the daily term, and we can see more towards how strong this resistance has been, roughly at around 1296. We can see the uptrend line support here, keeping the higher levels. Something you want to see even more short term, but since point whatever lows you want to look at, we got, I guess, starting here at under 12. Nice little move, then this little low here, this little low here, even this one here at 1242. Small one here on this day, but overall a very good move higher. We've had the sideways correction. No big sellers in, at least as of yet. When we shorten this out, we can see the strength of the level of resistance in here. Hit 1, 2, 3, 4, 5 different times after it had a correction from this point. So 1 goes down, so that counts as a new time here, and so on and so forth. The uptrend line we can see definitely intact at this level, so therefore however you draw this, there's only about a few more periods left, another day or so, until this line really matches really close to this one. And then we look at this on the single hour time frame, and this is all just short-term stuff at this stage, but hanging in there. It's since this red candle moved down, we've had no further down moves, and then no further up moves since this one in here. And then you're seeing uptrend, downtrend, a lot of indecision. If it goes down, we might probably just go down to this previous support here, 1287, 1286 area, and then breaking out above this. Okay, we'll get another test number 6 of this high. If, of course, that's what you would usually expect, and well, who knows if it breaks it. At this stage, looking at this, I don't know if it's going to break it to the upside or downside, but I realize breaking it to the upside is pretty decent situation. Getting above here, we could have big gains, but breaking it to the downside means that well, this support level here. Yeah, so I'd be thinking we could go 1286. So if we break 1286, well, we'd be looking to go down to like high 1270s, 1277, 1278, and even if it were to go a little bit further down below that, I mean 1237. I mean, yeah, it could easily do it, but it's a quick move. I'm just saying that a lot of these price corrections, if it goes to 1260, it's got a lot of this empty space, and it could still easily, or I'm not say easily, but a good chance at least of finding a higher low if that were to come into place. I just like the odds that this thing is going to break out overall before any serious price corrections. That's the better way of putting it. So short term, if we end up having a move to 1286 or 1280, that's not a serious move. Let's take a look at gold against the Canadian dollar. And amongst its single hour time frame, showing a lot of this choppy action over the last several hours. But looking at this on, of course, a more longer term view of the market, price correction down, which has stabilized a little bit. Is it over? Well, the question is, we've had, or to figure out the answer to that question, there's your support, there's a little bit of established resistance, band corrections getting above it. Now the 18 is starting to rise. That's one of the things we're looking to see. So if it gets above a rising 18 average and this resistance here, then I would, especially if it's got a big move like this, I wouldn't be surprised if it breaks this, that it has a good chance of hitting new highs from this. But what usually happens is these markets will have a fast move to these previous highs. They'll probably stop going up at this level more times than not, somewhere above, below, or right exactly where it was before. And then it might be a key top, but a lot of times at a bullish level, it might go sideways there for a while. May find some sort of higher low. This is why I don't like trying to predict these spots of what's going to happen, definitely on the trade spot, because on the rare situation, or less than 50% of the time it does this, then it's not going to be resistance. You're probably going to have a monstrous gain. Whenever you have point A low, point B high, and point C low much higher than point A, and then you break point B, getting a decent gain of point D high, or whatever that letter happens to be in variable terms or number terms, would be pretty large in comparison, because just like here, you break resistance, good leg higher, break resistance, I'd be expecting a good leg higher. So if we look back just at this little level here as that comparison, I'll remove the lines and bring the periods back a little bit. This is that situation then. It was 1165, then it goes up to 1665 rather, or whatever. It was down to here. We can see there you are back to that point. And in here, let me just do less candles to see it better. It had a few periods of going sideways at that level, very little resistance, but when it broke it, good green candle up, small correction, and then there we go. And just grinding its way higher for a very good leg up. So therefore, again, if it breaks this level of resistance on any form like that, it could very easily have a significant gain. Looking at this on the daily chart, it's went below the 18 average of lows, and that doesn't concern me much on charts. When I see all of this empty space, I realize any kind of last high or low, these are the last few in here. Therefore, this is totally fine, as even this would be as well. And therefore, if I were to look at this on like a, and I don't got the availability to show this anymore like this, but say a 29 or a 29-hour chart, or just a little bit longer than this, then I know I could see like the 18 could easily be holding in this area. And that is still a bullish situation for me. It's still got to get above these key points. So for what it's worth, I still need to see momentum breaking above here for me to consider, okay, we could continue this up leg higher. We've established some great support here. Therefore, if it breaks below all of this empty space, previous levels, this would be the first leg. Not such a strong previous level of resistance. Might be short term. If it is short term, I'd be looking at a failed breakdown if it does that. If it goes through this, again, short term and some variable, I would expect this to be a stronger level, at least just by looking at it from this point of view. Moving this onto the weekly chart, and within such, we can see a very good move. Big levels of 16.25. It's already below the 18 lows, but it's about a 61.8% Fibonacci. That's what it needs to hold. It's that key level out of all of this empty space from rally low, or from point low to point high, a higher low. The lowest I would want to see is somewhere around here. Keyword is lowest. It could easily just shoot up and have a big move. And if it does, and we look at this on, say, the monthly chart, we're looking at a pattern that is relatively interesting to say the least. What kind of upside targets do we have on breaks? Well, we have this level of resistance. To say it's a big level, I think would be an understatement because it's monstrous. And to say it's monstrous might be an understatement as well too. We have, or at least you could say we had, I still like to put this in present tense, we have this uptrend line. I'm not going to draw it straight. But I really like to see, like, oftentimes before a big move, I've seen this, like, failed move beforehand. Is this pointing it out here? It's got the potential to do so. And to me, just like cryptos, and I don't got as much data in here, I can go back to gold on the US chart for more data here, which I'll do at this point. Now, but they go. We can see what happened when it broke resistance back in here, getting above some of these other highs. Yeah, it just went off. And just like 1987 for stocks, its stock market crash was just a good short-term correction, as was 2008 here. The only good correction it's had since this breakout is the current one. And this resistance is big, just like that one on the all-time highs for Canada is big. So it makes sense to me that either way, Canada breaking its resistance to new all-time highs, getting to 2,000 and above, big move. But breaking this resistance, big move. And it's already a big distance for what it's worth. A decent anyway. Number-wise, that's given. That's 1,300 and change going up to 19. Therefore, when that makes a new high, and then when this one breaks this level of resistance, ideally what you'd want to see, depending on your situation, I mean, a big breakout for some is what they love to see, but you come up to this resistance point, maybe you settle in and go sideways for a bit, have maybe a very quick price correction like that, and just off she goes to the races, a sort of deal. Okay, now let's take a look at this against the cross on Bitcoin. Can't do it on this site. I wish I could. And I'm going to do it on a spreadsheet. In the last 2,500 or more days on Bitcoin and gold. Therefore, 2,500 plus days ago, it was a 500 to 1 ratio. That means for 1 ounce of gold, you were getting 500 Bitcoins. Number broke below the par level. This is a logarithmic scale, but obviously we can see with the Bitcoin sell-off that this has rallied. None of this chart really has any moves because gold's been doing anything, because it's been not doing anything. This chart should and will soon move in a direction significantly because of gold. And that would be a very interesting thing, because gold goes up and Bitcoin either goes down a little bit or goes sideways. Or gold goes up so much and then Bitcoin goes up and this one hardly moves at all. And that's still a big situation, but nothing like that has happened. This market has been going down because Bitcoin goes up. This goes up because Bitcoin goes down. And that really is all there is to it. And the volatility is extreme. Now I've done the buy low, sell high amongst the this here. And basically what I did is I go to the start of this, because I got the data in here. This is when it was 307, and I'm thinking, well, let's just assume you got into Bitcoin when it was $6. And you're a relatively big game, but not a monster player. You have enough to put $6,000 in, so you could buy 1,000 Bitcoins back then. But you want to do it because you want to get gold. And you realize back then you can get yourself like 5 ounces, 4 ounces maybe. Gold price was 1,800. Ooh. Yeah, you get yourself a little over 3 ounces of gold for 6,000, but you're like, I want more. And I think Bitcoin, I can trade it and then buy gold with it. Well, how would you do? Well, what I would do in here is I would say, well, wait for Bitcoin to triple, which means to 100. Start buying gold when it goes below 100. And it would take a little bit. As we can see, it got to 700. So right off the bat, you would have bought Bitcoin and you would have lost half your value. Good thing you wouldn't sell. And it took a while to go to 100. Darn while. There we go. So therefore, to go over the sum of these trades, like I stated, 3x a good gain. We'll start buying at 100, and I was thinking, ouch, that's high. Because if you would have just bought Bitcoin now, then turned it into gold a year and change ago, I mean, that's just all you had to do. But you have to figure, if you've already got a triple gain, you're going to want to do it. So therefore, The buy came in at 97. And then I'd pick a level. Once it goes below 60 or above, say 135, I'm either going to buy or sell. And there was no buy orders, and I'm not taking advantage of intraday highs and lows, but this will still work for me. But buy at 58 and change, and the ratio of 34, 21, 11. Small sell at 20, and it worked out that I think I was going to pick like 16 or 17. I just had a huge, what would have been down day on Bitcoin, and then that's what the closing number was. And so I got the sell then. I got the buy back at 11.23, buy at 5.78, 2.93, 1.73, sell it at 2.79, sell it at about 4.5, buy it back at 2.73, buy it back at 1.49, new buy at 0.85 and 44 and 28 almost, and then 17 and then 0.09. This is like last year and change ago. And then just recently, 3 buys have come into, or 3 sells at 16, 26, and 39. Now, as far as position sizing, what I think would be a strategic way of doing it, if that was one's goal, to increase their goal and their gold and play the volatility, and a way of doing such would be the following. And these cells aren't centered or any formatted much, but it's all about the data. And the dates in which these happen, we can see, like right off the bat in 2013, talk about being a busy beaver, at least up until April 20th. We can see, and then April 20th, nothing till November in 2013. Then lots of trades in November. 2014, the only trade was on March the 30th. 2015, there was only 2. January and November. 2016, there was only 1. Then 2017, things got volatile again. May, June, October, November, December, and then on the other side back in February, November, and this last December. So therefore, as I look at it, you start off with 1,000 Bitcoin. You have no gold, although if you are playing this, you probably should have a little bit if that's what you're looking for. If you could afford 6,000 or 7,000, or yeah, around a few thousand to get Bitcoin, you should be able to have some precious metals behind. But assuming it this way, the way I'm looking at it is, I figure you could buy 3 ounces of gold for 200. You can get rid of 294 of your 1,000, knowing the price has tripled. That's how I looked at it. And then the market goes up again. So this is a new total. Now you're okay. This is the price. This is so you're down to 700 Bitcoin and up to 3 ounces of gold. Buy 2. Bringing it down, and this is the cost in here, and then 100 and 107 and 82. So as the price shot huge up to Bitcoin, you would see your Bitcoin numbers go from 1,000 down to 293. And another way of looking at this, if you got caught in any Mt. Gox situation, you'd be happy you turned this into gold. And here we have a spot where you'd have a buyback. And notice how I numbered this. After buying 70 or 7 ounces of gold for 82 Bitcoin, I would have looked to sell 4 of them for close to the amount of Bitcoin that I bought it for. So in this case, I'm up, just in these 2 transactions, I'd be up 3 ounces of gold, costing me about 1.5 Bitcoin then. It would be like, oh, what a fantastic deal. And also, when you think of it this way, as far as how you play this game in real life, that means when you made this trade here, you would have been ready to buy or sell 4 of them at around the price point of around 20. So therefore, you would have just withdrew 3, in a sense, bought 3 into your physical possession. And of these in here, 8, 10, 13, maybe 5 of those you've put into physical possession, and more so as time goes on. Just something you'd want to think of, because really the only way you could tangibly do this really easy enough is to play some sort of paper game. You can't turn GLD into gold, but you can sell it on the market. You can then buy it. It is a pain in the ass, obviously, but it technically can be done. And also, if you're good at buying and selling gold, as it is, and what I mean by that is if you can sell it for more than you can buy it on any given day, you're good at it, and then you just do it that way. But throwing those parts aside, we would see buy 7 for 79, then paying 58 Bitcoin, 34 or 44, then 34, and getting the gold total up to 68 ounces at this stage. We can see the same thing here again, how I would sell for almost 35, or buy for almost 35, sell for almost 36. So here I gained 7 ounces of gold in 1 Bitcoin. And then this transaction, I ended up selling, I basically got 3. This was a bigger gain. I've got some extra Bitcoin. But as we can see on the buyback, I bought 19.5 in this case, and this is all hypothetical, of course, when I sold 12, and it cost me just a little less. And same thing here, I buy 23.5 when the last transaction was 13. So there's another way of saying, okay, I sold 13, I bought 6.5. I mean, there's a gain of 6.5 there, and 11.5. That's like 18 ounces or 28 ounces I'd be profiting on just that. And then all these buys, because Bitcoin prices goes to 2, 4, 5, 10, 20,000. And that's 23.5, 35, 55, 75. Buying it for less Bitcoin each time, we can see 30, 24, 21, 15, 150. So the last one on December the 6th would have brought one down to 51 Bitcoin after having 1,000, and then up to 491 ounces of gold. But the price of Bitcoin has declined, and thus we can see that 150 ounces bought, you could sell pretty much 86 and around the same price. Same thing here on this 90 to 60 transaction and the 75 to 55. So therefore, the next buy, if the last transaction was 0.39, where would I be looking to buy or sell next? Well, I see 3 sell orders in a row. This is a market that is trying to turn over, thus it's overall bearish. I would probably not want to buy till under 25, probably 24. I would be looking to buy. Sell next, 53, 54, 55 area. And then selling on the 55 area means that you would be selling around 24 Bitcoin worth. It's going to be less than 55 ounces. And then, of course, buying around the 25 number would be buying about 21 Bitcoin worth. And it'd be more than 55, obviously. And at the time, after the last transaction, December the 16th, 102 Bitcoin and 290 ounces of gold. And we look at the price of what 102 Bitcoin is worth, basically 100, at around 3,500. We'll just use a 3,500 easy numbers. That's well over 1/3 of a million, noticeably more than 1/3 of a million. And gold at around 300 ounces and just well over almost 1,300. Well, 1,300 on 100 would, or 100 of them would be 130,000. So there we'd be looking at, well, almost 500,000, 2/5. Therefore, like a, well, I mean, $700,000 worth. And at the start, I was talking about a situation of putting like several thousands at work. And this is what you'd see like 100x gain, which is just a phenomenal result. But obviously doing all that work meant a market that has had, let's just put it this way, Bitcoin was $6 then. If it were to have a 100x move from $6, it would go up to 600, which means it's had a 500x gain. And these strategies I talk about, buying and selling back and forth like this, when a market goes haywire crazy like this, it's going to be so difficult to overperform it. But when you're looking to ensure profit, get the best chances of profits, and in this case, the scenario was to end up getting gold. And if one would have done so, realizing all they could have got with the original investment was 3 ounces, and then been able to do something like this and see that they got what was 500, what is 290, and all the Bitcoin as well on top of it, well, then that would be successful in one's venture. Even if something happens to the banking system where Bitcoins get frozen, your GLD gets roughed up or whatever, because of the 290, you'd have to ask yourself the question, how many of them would be in your physical possession or have been delivered to you? How many of them are in paper markets? And I like to finish that off with the answer. That would be one would have to answer for themselves. But you can see you'd have to have some on the exchanges or somehow ready to be able to buy and sell. And again, the best way of doing it would be knowing how to sell and buy gold. And in that if you could sell it for pretty much the exact same price you can buy it, it makes it a lot easier to do it physically. So therefore, you know, on a place like APMEX or Silver Gold Bull or the shop you go to down the street or or a few miles from your house, that you always know it's based on spot price, it's going to be this much over spot or it's going to be this price. If you can do that, then you would have none of those 200 or 90 unless you're playing in process. And even then, it's all about, say for example, on this day, what would happen is, let's just assume you were able to sell 55 ounces. That means you'd be very good at selling for the same price that you could buy at. You would have sold 55 ounces. Then you would have taken these dollars and you would have bought in Bitcoin somehow, which is pretty easy to do because somehow is pretty much at exchanges. And within this, I also want to point out too, what I did on this, I used 1% rake. For the reasons that you go to Coinbase, it costs you more, all that type of stuff. So instead of doing like 1/10 or even 1/4%, I wanted to put 1% rake. So therefore, when you did it cost 101, and when you got a sale, you got 99% of what you were supposed to get. And again, I did that intentionally. Thank you for tuning in and have yourself a great day. Bye-bye.